Hey folks, welcome back to Gold Silver Frontier. Before we dive in, a quick but important disclaimer. Nothing in this video is financial advice. I'm not a licensed advisor, and I'm not telling anyone what to buy, sell, or hold. This is just my personal opinion and analysis based on public data and market observations. Precious metals like silver are volatile and risky. Past performance doesn't guarantee future results. Always do your own research, consider your financial situation, and if needed, talk to a qualified professional before making any investment decisions. Investing involves risk of loss, including the potential loss of your entire principal. Okay, with that out of the way, let's get into it. Pull up a chair because today is one of those days where I really mean it when I say drop everything if you can. If you own silver in any way, maybe American Eagles in your safe, some generic rounds in a drawer, bars stacked up, or even a little in an ETF, listen close. The next 4 to 5 days could literally decide whether you end February popping champagne or staring at your screen in disbelief. I'm not hyping this for views. I'm not being dramatic just to get clicks. What is lining up in the silver market right now is honestly one of the wildest setups I've seen in years of following metals. Think about it. Less than a week ago, silver touched an unbelievable all-time high of 121.64 per ounce. People were going nuts, social media full of to-the-moon memes, new buyers jumping in, old holders feeling like geniuses. Then, in one brutal 24-hour stretch, it fell over 30%. One day. Gone. Right now, February 1st, 2026, we're sitting in the $85 to $90 range. That's still a monster gain from a year ago when it was hanging around $32, but man, that drop stung. The crazy part? The crash didn't solve anything, it just created confusion. The real story, the factories screaming for silver, the mines not keeping up, the empty-ish vaults, none of that disappeared when the price tanked. Paper traders freaked out, but the physical world didn't blink. And now, we're walking into a perfect storm. 6 massive forces are slamming into the market all at the same time, all in the next few days. One alone would shake things. All 6 together? This could be the moment the market picks its direction for the rest of 2026, and maybe beyond. Most people holding silver have no clue this convergence is even happening. That's why I'm here, talking fast and straight. Let me walk you through it step by step so it makes total sense. No jargon overload, just plain talk. First, let's do a quick rewind so we're all on the same page. Thursday, January 29th. Silver spikes to $121.64. 9 straight months of gains. Over 170% up from the year before. Euphoria everywhere. Feels unstoppable. Friday, January 30th. Boom. Drops more than 30% to the $78 or $84 area. One of the nastiest single-day percentage crashes since the Hunt brothers mess back in 1980. Trigger? President Trump names Kevin Warsh as the next Fed chair. Markets read that as dollar gets stronger for longer, so precious metals get hit hard. But here's what really matters. Fundamentals didn't flip. Industrial demand is still through the roof. Solar panels, electric cars, phones, 5G gear, medical stuff, all need silver. Global supply is still short by hundreds of millions of ounces every year. Comics vaults were getting drained fast before the crash. China still has tight export rules. Nothing changed in the real world. Only the screen price went haywire. That gap between paper chaos and physical reality is about to get tested hard in the coming days. Now the main event, the convergence. 6 big things hitting almost simultaneously. Number 1, chart battle zone. Silver is stuck right in the $85, $90 pocket. This isn't random. All the important moving averages, 50-day, 200-day, old highs and lows from last few months, they're stacked here like a wall. Bulls are defending it. Bears are trying to smash through. If we close above $90 solidly a few days in a row, crash looks like a bad dream. If we break below $85 clean, next stop could be 70s or lower fast. This is ground zero. Number 2, Friday's jobs report, February 6th, 8:30 a.m. Eastern. The January non-farm payrolls number. Wall Street expects maybe 150,000 to 175,000 jobs added. But the real power is in surprises. Hot number, dollar rallies, silver hurts. Weak number? Rate cut hopes come back, dollar softens, silver can fly. This single release has swung metals 10 to 15% in hours before. It's a missile. Number 3, March futures and options. Expiration dynamics. Traders are rolling positions from February into March. Open interest in March options is exploding. Big bets on both calls, up, and puts on down. That tells us smart money is bracing for fireworks. Volatility bets are sky high. Number 4, commitment of traders report. Same Friday, 3:30 p.m. Eastern. This is the weekly snapshot of who's long and short in futures. Commercials, hedgers like miners' banks. Managed money, big funds, small specs, retail crowd. Did commercials lighten shorts during the panic drop? Bullish sign, they think low prices are attractive. Did they pile on more shorts? They expect more pain. This data moves markets when it surprises. Number 5, daily comics inventory flows. We get these every day this week. Before the crash, warehouses lost millions of ounces in days, 33 million in one stretch alone. Registered deliverable metal was down to about 124 million ounces total. If draws keep happening even at $85 silver, physical demand is rock solid. If metal suddenly flows back in, maybe the squeeze narrative cracks. Number 6, physical premiums from dealers. Well, this is my favorite real-time lie detector. Premium R's extra, you pay over spot for actual metal. During the rally, Eagles were 10 plus for over. After crash, reports say they're still $6, 8 over. 10 Oz bars, 3.5 over. If premiums stay stubborn or climb, buyers are still hungry. Paper crash didn't touch real demand. If they crash to $2 after dollars, selling is spreading to the physical side. 6 catalysts, 1 tight window. That's why I'm saying the next few days matter more than usual. So what usually happens after a violent 30% crash like this? 3 classic paths. Path A, dead cat bounce. Price pops a little, everyone cheers. Bottom is in, then fresh selling crushes it to new lows. Path B, V-shaped recovery. Panic exhausts itself fast. Strong buyers step in, price rockets back quick, sometimes in weeks. Path C, sideways grinder. Up a bit, down a bit, violent whipsaws. But no real direction for weeks or months. Everyone gets chopped up and frustrated. The next few days, especially Friday, will give us strong hints which path we're on. Here are my personal probability guesses right now. These can shift with new info. Scenario 1, recovery rally, almost 30% chance. Jobs come weak, dollar fades, Coty shows commercials covering, inventories keep falling, premiums hold firm. Silver rips 15-25% higher fast. We could see $100, $110 by mid-February. Crash becomes healthy pullback. Scenario 2, double dip disaster, 25% chance. Jobs beat big, dollar rips, shorts stay heavy, inventories surprise build. Silver breaks 85 spa dollars, heads to $70, $75 quick. More liquidations, headlines scream, silver crash 2.0. Scenario 3, choppy nightmare, 35% chance. Data mixed, catalysts cancel each other. Price swings $80, $95 wildly all week but ends roughly flat. Bulls and bears both get hurt, most painful for traders. Scenario 4, sneaky bear trap and squeeze, 10% chance. Dips under $85 early, trigger stops, looks scary, then boom, reversal on good news. Shorts panic cover, price explodes higher. Catches almost everyone wrong-footed. These aren't predictions, just my read based on patterns. Let's look back at history for clues, because markets rhyme. 1980, Hunt Brothers cornered silver, price flew to $50, then collapsed over months. Took years to find a real bottom in the single digits. Lesson, spectacular squeezes can end in long bear markets if fundamentals break. 2011, silver ran to $49.82, crashed to $32 in days, bounced, crashed again to $26. Didn't sustainably break higher for almost a decade. Lesson, even strong demand can get buried under technical damage for years. 2020, COVID crash. Silver fell from $18 to under $12 in a flash, and then reversed hard, ran to $30 in months, eventually much higher. Those who held or bought the fear made fortunes. Lesson, sometimes the scariest drops are the best setups. Now we have January 2026's 30% one-day plunge from record highs. Which rhyme will we follow? The next few days start giving answers. Okay, practical talk. What should different people do? Long-term physical holders, most of you watching. You bought for the long game, shortages aren't going away, green energy demand keeps rising. You're still up huge from last year. My advice, do almost nothing different. Hold, breathe. The paper swings are noise. If we get a scenario 2 drop to 70s, that's a gift if you've got cash and patience. Decide now. I won't sell no matter what this week. Write it down. It helps when emotions hit. Active swing day traders. Volatility is extreme. Reduce exposure if you're loaded up. Tighten stops, but remember, gaps blow through stops in big moves. Have clear rules written before market opens. If we close above $95, I add. Below $80, I cut half. Don't freestyle during chaos. Leverage players, futures, options, 2x, 3x, ETFs. Seriously, deleverage hard right now. Cut normal size in half, then half again. We saw 30% in one day already. It can happen again, up or down. Protect your account first. New buyers or dip shoppers, don't FOMO in before Friday's data. Wait for the smoke to clear. If you must start, buy small amounts of physical metal. Dollar cost average. Avoid paper products in this storm. What I personally watch every day this week, price checkpoints. $90, strength if holds. $85, critical defense. $82, break, Dodge Moore's warning. $78, retest of crash low, bad if violated. Volume, big volume on bounces. If you want real buying, big volume on breaks, or real selling. Dealer premiums. Check JM Bullion, APMEX, SD Bullion Daily. Are Eagles still $6 to $8 over? Any reports of limited supply or allocation? COMEX inventories. Daily reports, net change in registered ounces, continued draws, also very bullish. Thursday evening, how's silver trading heading into jobs? Quiet, rallying, selling off. Pre-positioning tells expectations. Friday, 8:30 a.m. Headline payrolls versus estimate, unemployment rate, hourly earnings, revisions. Then watch dollar index and silver in first 30-60 minutes. Friday, 3:30 p.m. Co-T breakdown. Who's doing what? I'll be glued more than normal, not to trade crazy, but to stay sharp. Now the hardest part, the mental game. You already survived January's crash. That hurt. Confidence got cracked. Now the market might test you again or fake you out with a bounce that makes you mad you didn't buy more. Emotions will scream, sell, buy, hedge, do something. That's normal. But winners follow pre-made plans, not real-time panic. My tip, tonight or tomorrow, write one page. If scenario 1, I do X. Scenario 2, I do Y. Stick to it. Markets love to punish the emotional and reward the boring, disciplined ones. Where I stand personally, full transparency, physical silver in my safe, long-term hold. Fundamentals still scream higher eventually. I booked some profits, 100, 120 range, zero leverage. January taught me that lesson forever. Cash on side for big dips, emotionally ready for plus 20% swings this week. If rally, add dips. If drop, buy lower. If chop, chill. Not advice, just my honest setup. Your life, your money, your call. After this week passes, we get clarity. Fundamentals haven't budged, demand exploding, supply stuck, vaults low. Short-term price won't kill the story, but it can shake weak hands out before the big move. The January crash already transferred money, from panicked sellers to patient holders. This convergence could do it again, maybe bigger. So stay alert. Check prices a couple times a day. Read the data fresh. Have your plan locked. You don't need to be perfect, just prepared. If this breakdown helped you see the big picture, hit that like button right now. It pushes this warning to more silver owners who need it. Share the video with friends or family who hold metal. They'll thank you later. Subscribe to Gold Silver Frontier and turn on notifications. I'll drop quick updates this week. Jobs reaction, COTI deep dive, whatever moves. Drop a comment. What's your silver plan? Holding strong? Cutting back? Looking to buy more if it dips? How did January treat you? I read everyone. The convergence is here. Opportunity and danger riding together. Be ready. Stay calm and let's see how this plays out. I'll catch you in the next one. Stay sharp out there.